Hi everyone, my name is piterpakulski. Today we will start a new financial model. This will be a subscription financial model. We'll be building it from scratch. I have an empty Microsoft Excel spreadsheet open. So I hope that you will like this video. You may give us a like, subscribe, write us a comment, or you can order a financial model from scratch. We can help you with that. So I will be going from revenues, from types of customers, then we'll be going through payroll, fixed costs, investment plan, cash flow statement, then we will have a final overview video as usual. So I'll be creating it from scratch, assuming some things. So let's start. So this will be a very interesting process. I hope you like it. So first of all, we have to start with different customer types as usual, because inside subscription model there are different types of customers that pay us. For example, some of them pay us monthly, quarterly, half a year payments, 1 year payments. This is one group of parameters. The other group of parameters that deals with revenue is that how often they stay with us.
Some of them just come and go and they don't pay us a penny. Some of them stay with us for half a year, some stay with us for 2 years, and so on. We are to be able to play with all these parameters when we will have our cash flow statement be done. We will need to create different scenarios. What will happen if this amount of customers will reduce or increases? What will happen if we switch on and off different types of customers? So let's start. So let's start with customer types. So let's specify customer types. Customer type 1. Here I will be just creating some library on the top as usual. Later we can name all these customer types. Payment value, dollar per period. So these will be the inputs. We will mark them with our specific color. So this will be the color of our inputs. Then we specify how much they pay us. So for example, we'll have the first type of customer that pays us nothing, because this will also be very interesting parameter to see how many, let's say, empty customers we have in our project. So we spend money to gain them, but they don't pay us anything, and it will be very interesting for us to see how they affect the net present value, payback period, and so on. So so the second type of customer, for example, will pay us $20 per payment per period, 40. Here we will just period of payment. So let's say that the period is monthly. He pays us monthly. 3 is a quarter, 6 is half a year, 12 is monthly, is yearly payment. So these values are also an inputs. Then we specify, for example, this will be 20, 40, then let's see, 80, and for example 120. So this will be the values of payments. So for example, customer number type pays us $20, customer number 3 pays us once a quarter, $40, customer number 4 pays us $80 once in half a year, customer number 5 pays us $120 once a year. So then we have the next parameter. The next parameter is life cycle of a customer. Life cycle. Life cycle of a customer. Here we have 0, because this customer just comes and goes away. For example, these will also be the inputs. Then this customer life cycle will specify it in months. Cycle in months. So this customer with us, for example, 6 months. This customer, this group of customers stayed with us, for example, for 24 months. And these customer types will stay with us, for example, 36 months. What we will do now, we will create a customer. First of all, we will create coefficient for payment values. So we will create, when we will create the cash flow statement, we will have to make some scenarios. So for that purpose, we will just need to use this coefficient. We will add this coefficient to payments value. So for example, if we want to decrease, we see the cash flow statement, we want to increase or decrease some parameters, will be easily to do that. Then we will also have to switch on and off different customer types. For that purpose, we will create status on, off in the library. We will go here, use data validation, list, Here we put, for example, on for everybody, every type. That's an input, so we're marked with specific color. Then we on all types 0, 1. Now we have to explain for Microsoft Excel that if this one is equal to this, then 1, otherwise 0. Then we take these values, payment value, so payment value we take from here, then we multiply on this coefficient, we use this coefficient, we will just freeze it. Period of payment, we will use this value. So for example, if we want to switch off customer type number 7, will be it will be very easy to be done. So what we are doing now we have to specify the amount of customers, the general amount of customers that come to our project. So here we specify operating activity months. So for example, we have 10-year horizon. It will be 120 months, long period. So these are operating activity months. Then we specify how much new customers in general come to our project. So new customers. So here we just specify some numbers, for example 200 and plus, for example 30 people per month. So in the first month we will have 200, on the second month we will have 230 new customers. These will be the inputs. So these are new customers that will join our project. Then I will add a coefficient to this line, to this row, because when we create at the last stage, when we will create the cash flow statement, we will ask a very interesting question: what net present value should we gain to, for example, what amount of customers should we gain to have, for example, net present value for example, $20 million. And if we want to, for example, have the net profit like this, how many customers do we have to gain? And we will use a coefficient to play with the amount of customers to see how this affects the net present value and payback period and so on. So we will add here a coefficient. So the basic value will be 100%. This will be the input, so we'll mark it with our specific color. Then we create new customers plus coefficient. Then we multiply this value on this coefficient. So for example, when we see the payback period, we would like to see, for example, what will happen if we have 80% of current amount of customers that we've planned, or if we have only half of amount of customer that we've planned, or what will happen if we have twice amount of customers that you have, and we will see what will happen. So this will be a very interesting thing to dive into. So this was the beginning of the model. The next video we will be swimming around customer types and their values. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. So see you next videos. Thank you and bye.